Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased price action analysis, and today is an aftermarket video with Uncle Charles. Looks like the bulls got by on the skin of their teeth, by the skin of their teeth, as my teacher used to say back in elementary school, by the skin of your teeth. Why? Because, well, they avoided a breakdown of this green triangle that I have here. Okay. I have multiple tests. I started from the high of October 30th. I have a test or a touch here December 20th. And then here January 2nd. I guess you can count January 10th. Today we gapped below it. Looked like we was going to get a breakaway gap, a bearish breakaway gap. But market makers said, no, not today. And the bulls just barely got by. Closed a tad higher than we did on Friday. How did we approach today? Well, this morning's video, I talked about how we're in a bearish trend. But instead, the market decided to bounce, and we have this nice little green candle here. Is this a bottom? How did we trade this? Well, we go to my SPY update, okay? I wrote this at 9:30 a.m. I was running a little bit late, but it was just in time, okay? 576 and 578 must clear to put 580 plus in play. That was the plan. And I wrote, if 576 defend as resisted and 574.2 failed, then I would favor 573 and 571.6s to be in play next. We look at the 15-minute chart, right? Around here is the 9:30 candle right here. And you can see that it opened below my 576 level. I'll change this line to pink, red. That's the 576 level. All right. What happened this morning? Uncle Charles, I always give you the levels ahead of time. And I always say you want to use the 15 to 30-minute chart. Well, you can see here on this candle, this 9:30 candle, we cleared 576. And of course, I updated the group. 576 clear, 578 is in play. Cleared 576, and we smashed 578. That was the next level. You want to play it level to level and leave runners. We had a nice little pullback, nice little rejection from 578. Went back and retested 576. And what happened? We had the bounce. Back tested that 576 level as a support and bounce, but it got a little tricky from there. Had a false breakout. Had a nice little false breakout, and it was a nice level to level move if you know how to trade it. We cleared 578 at 10:30, broke it back down at 10:45. That was the trigger for puts, and it gave us a nice little level move down to 576. But that's all we got, was a little level to level move before it bounced, reclaimed the 578 level before taking us higher to 580, cleared 580, and eventually at the end of the day smashed 582. My mentor, Grandpa Charters, used to always say to me, nephew Charters, you need to trade what's in front of you, not what you think. All right, and that's what it's about. I mentioned this morning, we was in a bearish trend phase, but today look what the market gave us. It gave us a bullish setup. And all we can do is trade what is given to us. Trade what's in front of us. If you guys took a loss today, dust yourself off. Sometimes we fall, but we always have the choice to either stay down or we get back up. And as sheeps, we get back up. Why? Because the price action is moving. It's constantly moving up or down, sideways. So we got to get up so we can continue to follow. All right. And I do want to say this, guys. There is a science to all this. When we are planning our trading day, right? We plan finding the levels, what we're going to do, what we think is going to happen. We're using a different part of our brain. Okay. And then once the action begins, the market is open and we start trading, we're actually using a different part of our brain from when we're planning versus when we're actually trading. This is something I want us all to consider as sheeps. And really study it and figure out how to use the knowledge to your advantage. Figure out how to control your fight, flight, or freeze response. Okay, this is why I say trading, you're operating in the realm of, you know, the unknown. Okay, there's no absolute in the market. Okay, a lot of first responders, police officers, I'm telling, they have 100 million stories to tell you. Okay, I'm talking from a mindset perspective, not that trading is as hard as those jobs. Okay, but a mindset where you operate in the realm of the unknown. Okay, so everything is about probability. So every decision you want to make has to be the highest probability to give you the results that you want. Safety, right? Getting home safe. In this case, for trading, is getting your money and keeping it in your trading account and not letting the market makers take it. This is why I say you want to trade it level to level, no greed, be open-minded to up or down situations, but also really study how your brain, the human brain, works. You guys are planning out what I'm going to do. I'm going to long when this breaks out. I'm going to short when this breaks down. And then when you trade, all of a sudden you're acting completely different. You said you was going to respect your stop loss, but instead you're averaging down. You're averaging down. You said you was going to be very tactical about it. And then instead you're getting very emotional and you're mad at God. Okay? So that's something I want you guys to learn. I know I might sound like I'm blabbing, but it's very useful information. And I believe it can help you become better at your performance, your trading performance. Okay, so I hope you found value in that information. All right, now let's get back to the charts. All right, this is how we traded. We used the 15-minute chart. We identified the levels. So now we look at the daily chart. We see that the bulls avoided a breakdown that could have definitely been, made the chart look a lot more bearish. That was around the 580 level, and we did hit 582. But my fib levels are on 583.8, and I'm rounding it up to 584. Okay, I'm watching the 584 level. So I'm still overall bearish below 586 and 584. So if today's bounce is not a dead cat bounce, 584 and 586 must recapture to put 587.5 and 589 in play with 591 above. That would definitely recapture that multi-month trend line. All right. If the plan for the market makers is to send us back to the downside, if today's bounce is just a dead cat, then 580 and the fib level at 578 must break down. We break down those levels, then we can head down lower. The bearishness that we had these last few weeks and month can continue. Remember, I'm giving you guys the levels. 580 and 578 fails, 576. 574.2, 573, 571.2, 570, and 568 will all be in play. Why am I giving you guys so much pivot levels? Because like I said, like I show you on the 15 to 30 minute chart, this is how you want to trade it. We clear a resistant level like this 930 candle, you want to look to long. If we break down a support, like we get a false breakout setup like this 1045 candle, you want to look to short and play it level to level. If you want to play for a potential bigger move, you leave your runners, okay? You let your runners catch this, okay? So for example, you play 576 breakout, you take most profit at 578 and you let your runners run with your stop loss below 576. And if you did do that, you should have been very green today. And if you did, you should join Uncle Charter's Discord. Check out the pinned comment below. Anyways, so let's move on, guys, to triple Q. All right, this is where we speed things up a little bit. All right, so triple Q also avoided a breakdown of a critical level, which was a 503.7 fib level. We got below it, but no breakdown. We closed above it. If today is a dead cat bounce, then support at 505 and then 503.7, which is that fib level, must fail. That fib level was also last Friday's buy zone. Keep in mind. So you got to be careful. Today could have been a stop loss hunting type of day. All right. Either way, if we ought to be bearish and this bounce that we had today means nothing, it's still technically a bearish day because it closed lower than Friday. But if we are to get lower levels, 505, 503.7 must fail to put 502, 500.5, 499, and 497.8 all in play. All right, if we are to get a bounce, then 505 and 503.7 must defend as support. All right, I have next resistance at 507, 509. That's a fib level. And if those clear, I reckon we could get a nice bounce up to 511.5, 513.7. And the gap fill is all the way up at 515. All right, guys. Just look to react the same way I show you guys on the 15-minute chart. Tesla, what an incredible bounce. Somebody the other day said, Uncle Charters, you charge so much for your Discord. You charge so much for your Discord. You see, I cover Tesla for my tier 1 members. That's the lowest tier I have. And look what I wrote here for Tesla, 9:28 a.m. No longs unless 383 and 384.5 clears to put those higher targets in play. Let's take a look at Tesla on the 15-minute chart, guys. Because Uncle Charters' cheap style trading works with Tesla as well. Today is Monday the 13th, right? So we look at, oh my goodness, look at this incredible move. Look at this. 9:30 candle. Cleared multiple level 384. Cleared 384. Look at that. Cleared 384. Cleared 386. Look at this. Cleared my 388 level. Cleared my, oh my goodness. Multiple levels. False breakup, but then a recapture right there. You guys see what I'm saying, guys? And it all started with the breakout of 384 and 386. This is incredible. Let's go back to the daily chart. But yeah, once we got the breakout, I wrote here, as of now, 386 is support. And if 388 clears, 390 and 392 are in play. We got a lot more than that. Incredible. And now look at this. We go to the daily chart. We have an outside daily candle. Excuse all the lines. Outside daily candle. What is that? That's not quite an outside daily candle. It's not. But that is a big body green candle nonetheless. And now we're already gapping up. Okay, now right now it's around 408. I have resistance at 409, 411, 412.5, 414, and 415.4. Those are all resistant levels, guys. Support relative to where it's at right now is at 407, 405, 403.6, 402, and 400. Okay, we're gonna have to see the breakdown. If anything, I'll make another video in the morning, give you guys an update. Let's see what happens in the morning. But right now, I mean, if you guys follow Uncle Charters' plan in the Discord and long the breakout of 384 and 386, holy moly donut shop, you guys should be up a lot, okay? And if you're not, you know what? There's always tomorrow. We live to fight another day, baby. All right, let's get to NVDA. NVDA also had a nice bounce, managed to avoid a breakdown of the fib level at 133, barely closing above. All right, so tomorrow it needs to hold 133 as support and clear 135 and 136.8 to trigger calls and put 140 in play. I'd feel a lot more bullish above 140, all right? Because if we lose 133 tomorrow, we're likely dropping down to 130. I think we could drop even lower than that, all the way down to 127-ish, all right? But loss of 133 would be very bearish for NVDA. IWM 217, look at that. Just a smidge close, just a smidge above it. Wow. We lost that level last Friday, but managed to recapture it today. 217 is a fib level. Bears, if they want to continue to keep control, they need to push price below 217 tomorrow to put 215 or lower back in play. Otherwise, if above 217 and 219 clears, oh boy, we're likely popping up to 220.5, 222, 224, and 226. Apple, well, it avoided a breakdown of my 0.786 fib level, which is at 233.6. If there is a bigger bounce, 236 and 237.5 must recapture to put 240 and 241.7 in play. If we lose 233.6 tomorrow, 232, 230.7, and 229 would all be in play for Apple. Amazon still looks bearish to me, but if it wants to turn things around, resistant at 219 and 220.7 must recapture to put 222 and 220.3. No, 223.6, excuse me, 222 and 223.6 in play. I would feel a little bit more comfortable calling the bottom if we can recapture 223.6. All right. Otherwise, I'm still overall bearish below 220.6. And yeah, if the plan is more downside, we need to break down 216. All right, break down 216, and we could drop a lot lower. The gap fill, man, is at 213.5, and there's another gap around 208ish, right around that area. It can happen. It can happen if support at 216 fails. Meta looks like it's chopping around. This is a big old cup. Look like we're dealing with a handle phase right now, guys. The levels are still the same. Yeah, I have resistance at 610, 612, 614, and 615.6. Levels are still the same. I need to see it clear those levels, which it didn't do today. And if the plan is to the downside, then support levels must fail. 608, 606.5, 605, 603. Below 603, I would feel a lot more comfortable calling a top for Meta. Microsoft, a little bit of a bounce, but still a lower closed. We did bounce off that 61.8 fib level. If there is more upside, then 419 and 421 must clear to put higher targets in play. 424 plus would be my target. I think it could break 424, but it would need to clear 419 and 421. All right, because if we break down support levels, I have support at 417 and 415. If those levels fail, then back down to 412.5. And I think we could head all the way down to 410ish or lower would all be in play. The DXY, is DXY looking toppy to you guys? Gotta be careful here. This ticker symbol likes to inverse the SPY, and if it's pullback time for the DXY, it could mean a bounce for the SPY. So definitely keep track of this. If we lose 109.5, it could be a sign of a pullback with 109 and 108 all in play. Okay, it needs to keep above 109.5 and clear 110 to give us more upside. Coin is trying to gap up. I do have resistance at 254. It's flirting with that right now. If it can clear 258 and 260 plus, would definitely be in play. Yeah, if it's pullback time or low, it is looking bearish still. I mean, today's close is definitely lower than Friday, so that's bearish. And if more bearishness is in the future, support must fail. All right, and I have it at 252, 250.7. That's a fib level. If they fail, guys, 249, 246 are lower incoming. Doge is, like, you see that orange arrow that I got there where we broke down that fib level around 34 cents. It's retesting it as resistant as we speak. Gonna have to hold it as resistant to keep that breakdown intact and keeps 32 and 30 cents in play. All right, I'm not trusting any longs unless we can recapture some lost levels. So recapturing 34 cents would be a good start to put 38 and 40 cents in play. Doge, wow. We got to be careful. This is not Doge, this is Bitcoin. We got to be careful here with Bitcoin. It looked like this morning it was breaking down the neckline. It's something that, you guys got to consider is the stop loss hunting. I posted this back in 2021. That's amazing. But you guys see the stop loss hunting with the market makers. They'll set up some support levels, building a cluster of stop losses, and then they'll attack those stop loss hunting before giving the real move. And I look at Bitcoin, it makes me think of that a little bit. You guys see what I mean? Oops. You guys see what I mean? So we got to be very careful. If this is a bigger pop, okay, if this is a stop loss hunting, then I need to see 96K clear to put 98 and 100K back in play. All right, if this is a dead cat bounce, then 94 and 92K must fail. Below 92K is be a breakdown of the neckline. No official close below it just yet. But if we get it, that would be bearish. All right, guys. I hope you guys found value in today's video. I really appreciate you guys for being here. And I try to make the time to make the video today. And, I hope it reaches out. It reached you guys. And You guys were able to get something from this. All right, I appreciate you guys. Peace.